Hello and welcome to Aberystwyth Business School video lecture series on Business Studies Level 3. I'm Martine Garland and I'm going to be taking you through the amazing journey of understanding markets and customers. This is a 4-part series of videos and this is part 1, looking at markets. So, why is a market important? Well, it doesn't matter whether you're a shop or whether you're an airline, understanding the market that you're in and the customers that you serve are two fundamental principles on which everything hangs. So for this exercise, or for this series of videos, we're going to pretend that we work for Fentimans. You're probably familiar with Fentimans. They are a range of artisanal soft drinks that have come onto the market in recent years, and so we're going to pretend that we work in the marketing department for Fentimans, and we're going to be doing some analysis and thinking about things and making some marketing decisions. So to start that then, which market do you think that Fentimans are in? Well, there's a few clues. All companies that are registered in the UK are registered at Companies House and they are given an SIC code. It's a very standard code for trying to organise companies, a little bit more about what they do rather than necessarily the market that they're in. So we see here some descriptions: manufacture soft drinks, production of mineral waters and other bottled waters, wholesale of fruit and vegetable juices, mineral water and soft drinks. Okay, so somewhere around there is the market that we are in, or more to the point, it describes what we do as a business. Registration at Companies House really wants to understand what is it that we do as a business. That's not quite the same as what market we're in. So, yeah, we're in the soft drinks market. Well done for those of you who twigged that. But that market then gets subdivided. As I'm sure you realise, the soft drinks market is very big and very broad. There are a lot of different types of soft drinks. And so it gets subdivided. We have carbonates, posh word for fizzy drinks, juices and smoothies, sport and energy, bottled water, squashes and cordials. So, if we look at that, which one do you think that we're in? Yeah, we're in the carbonates because Fentimans products are fizzy, they're carbonated. So we're in the soft drinks market in the carbonates part of that. But the carbonates market subdivides again because there's a lot of fizzy drinks, there's a lot of carbonates, there's Coca-Cola, there's tonic water, there's all kinds of different carbonates. So again it subdivides. And the carbonates market can be divided into what's known as the premium market, which is where artisanal mixers and flavoured carbonates sit. And this is where Fentimans are definitely positioned. So you can see, hopefully, that it's not enough to say we're in the soft drinks market. I wonder who our customers are, because that could include juice boxes being given out to toddlers at nursery. We're not kind of in that market, are we? So the more we're able to narrow down and hone in on the specific market that we're in, the more accurately we are likely to understand our market, the market forces, and importantly, as you'll see in the next lecture, the customers that are in that market. So we're in the premium market, we're in the artisanal mixers and flavoured carbonates market. So the next thing we want to really understand is how big is the market. Whether we're already in that market or whether we're looking at a new market to enter into, which a lot of organisations will be doing, the size of that market is going to be really, really important. Is it a big market? So how do we measure the market size? Nice and straightforward, actually. It's the total value of the sales revenue from all of the companies that are in the market. So as Fentimans, we're in that market. What's our annual sales revenue? And then there are going to be lots of other companies, our competitors, that are also in that market. And so if you add together all of the competitors in that market, you then get the size of that market, and it'll be given in pounds, if you like, in the value of all of those sales. So the reason why it's important to make sure that we understand the market size is to think, first of all, if we're thinking of entering into a market, is it big enough? You hear the expression, is that market lucrative? Is that market big enough to balance against the cost of being in it? So it's going to cost a bit of, let's say you wanted to be in the airline business, it's going to cost you a lot of money to enter the airline market. Is that market big? Yeah, it's pretty big. So although it's going to cost you quite a bit to get in it, if you can get into that market and more importantly succeed, there is money to be made. The market is big enough to justify the cost of you entering it. Another very important consideration is going to be, is that market growing or declining? Is it expanding? Are more people doing or buying that thing? Or are we starting to see a trend where actually it's really starting to decline? Now, you've got to be a bit careful when you're measuring this one, because sales might be going up in terms of the units that are being sold. So lots and lots and lots of X might be being sold. So you think, well, this is fantastic, the market's really taking off. But be careful, because maybe prices are falling. So it's going to be going down in terms of sales revenue. So although a lot of things are being sold, less and less and less money is being made. It is a declining market in monetary terms. Can the companies in the market continue to make a profit if prices keep going down? So although the market might look healthy in terms of units sold, prices are falling. Can we all continue to make enough profit to justify being in that market if prices keep declining and keep going down? Or do we need to maybe start diversifying a little bit, expanding into different markets? We are all set up for bottling drinks, fizzy drinks, but maybe we could bottle other types of drinks. Maybe we could go into bottling still drinks. Maybe we could go into water. Maybe we could go into alcohol. There are a lot of other segments that we could go into. Even just staying within our soft drinks market, we could go into juices and cordials. There's all sorts of things that we could go into that maybe we're not in at the moment. If we start to sense that actually it's been a few boom years, but now prices are starting to come down. This hasn't quite got the appeal that it used to have. Maybe times are tough and people aren't spending quite so much money on artisanal products. They haven't got so much money to spend, so maybe we need to start relaxing our pricing a little bit. And before you know it, are we breaking even well enough? Are we making the money that we thought we were going to be able to make? So the size of a market and whether it's growing or declining are obviously strategically incredibly important. So how big is the soft drinks market? Apologies that these are 2018 figures and we're now in 2020. Market figures often lag behind academic years. They are often 12 months behind the year that you're physically in, because annual accounts and companies publish their finances obviously a year after they have happened, and then also data being available in the public domain and being accessible can sometimes give a lag. So this isn't a lecture from 2018, this is a lecture from 2020, but you'll see as we go through a lot of the figures relate to 2018 because that's the available data. So as you can see, a massive market. The soft drinks market is billions. And the biggest one is carbonates. £7.9 billion worth is the market size. So if you add up all of the companies that operate in the carbonates market, that's not just the premium mixers and flavoured carbonates, that's everybody, Coca-Cola and everybody. In the UK, 7.9 billion. And then, as you see, it starts to go down. So is the market growing or declining? Well, if we have a look at this chart here, and apologies, what happened is in 2018, they changed how they categorised it. So if you see carbonated has just got one red bar, And then if you look along to the other side, you've got cola carbonates and non-cola carbonates. So until 2018, they used to break it down into cola carbonates and non-cola carbonates. And helpfully, in 2018, they stopped doing that and they made it one column. Whichever way you look at it, you can see, luckily, that carbonates is growing. So the 2018 figure there, even if you added all of those other two together, you can see that the trend is upwards. If we look at juice, which handily didn't divide how it categorised itself, we see, looking at 2018, which is the most recent, that it's starting to decline. So us sitting here in Fentimans, we can feel quite comfortable that our market is a big market and that it's a growing market, and we don't need to diversify into anything else. And if we were to diversify into something else, we probably wouldn't touch the juice market. Can anyone spot what else we might think is okay? Yeah, bottled water. It's not going up to quite the degree. Energy drinks, no. Concentrates, sports drinks, and other. Unhelpfully, we don't know what other is at the moment. But as you can see, the carbonates market is the strong one, and as an example of a declining market, we can see what that in the juice market. So going narrower, going narrower into the premium mixers and flavoured carbonates, we can see that again it's rising. So sales rose by 81% in the 12 months to 2019. So luckily we've been able to get some recent figures here because Fentimans published a market report in 2019, which we've included in the folder. So do go and have a look. It's a really, really good example and analysis of a market. I hope you find it as fascinating as I did. But anyhow, so these figures are coming from there, and we can see that the premium mixers sales rose by 81%. That's huge. And the flavoured carbonate segment grew by 5.6%. Doesn't sound much growth, but 47 million is still an incredibly healthy market to be in. So the size of the market that we're focused on is the 323 million of the premium mixers and the 44 million of the flavoured carbonates. So our market, not our market share, our market is 367 million. And what we want to know next is what market share we have of that. So the value of the market is growing. Okay, and so there's a really nice quote from the Fentimans market report there. Soft drinks and mixer sales is growing at a much faster pace than the volume, and a sure sign that consumers are choosing the higher cost option. So the reason for emphasising this, you remember we were saying about, well, you can still be selling a lot but prices are going down. The reason why this report gets quite excited is because it's saying actually the sales value, the money in the bank, is growing faster than the amount of units that are sold. So it means that people are buying the high end. They're buying the posh stuff, if you like. Okay, and Fentimans, as we've said, is a premium brand, it's a posh brand. And so the sign at the moment, year ending 2019, was people had money and they were spending it on premium versions of a product. So rather than Tesco's own cola, they were buying Fentimans Curiosity Cola, a premium brand. Okay, so our market share, we now know the size of the market, and market share is a very simple calculation because it's saying, well, okay, how much of all the sales in that market, which we know, are attributable to our company? And we need to think about that because we want to know how much market share do we need to make the money that we want to make. So when a company first starts, its market share is going to be quite small. Nobody really knows about it. But its 5-year business plan is going to have in there an incremental growth of market share. And they will be basing on, okay, in the next 2 years, 3 years, 4 years, 5 years, we need to have X% market share in order to be able to return a decent profit, keep our shareholders happy, and basically justify being in business. If you're not making a profit, if you're just breaking even all the time, or even worse, making a loss, kind of why are you there? So an organisation just starting out will have a very clear idea of how much market share they need to have. So we know the size of the market, and we've got sales of 40.4 million. That's taken from the annual report of Fentimans, the company, their financial reports. And so what percentage market share does Fentimans have of the premium mixers and flavoured carbonates market, which was 367 million, if you remember. So what percentage is 40.4 million of 367 million? I don't expect you to be able to do that in your head, so I did it for you. It's 11%. So with a turnover of sales revenue of 40.4 million, Fentimans have 11% of the premium market. Who's got the rest? Is that the first thing you thought? Because that's the first thing I thought. Because Fentimans, there's not that many brands in the premium market, so who's got the rest of it? Okay, so that question's going to come back in a later video. So market share is also thought about in terms of its concentration. So if there's a few very, very large companies that dominate a market, then these are markets with a high concentration. Okay, high concentration. If you think about it, the share of the market, if you like, is highly concentrated in a couple of companies. So the soft drinks market is highly concentrated because it's dominated by companies like Coca-Cola, for example. If there's lots and lots of small companies, then the markets are known as being a low concentration market. So hairdressing, lots and lots and lots of independent hairdressers, and they're not highly concentrated in one chain of hairdressers. There's lots and lots of them. So hairdressing is a market that has a very low concentration. Okay, high concentration like soft drinks, Coca-Cola, low concentration, lots and lots of independent hairdressers in your high street. Hairdressers reopened today after the lockdown. So a high concentration market example which I gave you was Coca-Cola, and I'm hoping you're as amazed by this as I am. Coca-Cola has 80 drinks across 20 different brands. Okay, and it is in the full range of the soft drinks market. There is almost not a type of soft drink that you could drink if you and not touch Coca-Cola somehow. So Coca-Cola, yeah, Sprite, Lilt, Fanta, that's maybe not quite so surprising. But when we look at some of those other names, Monster, Red Bull, Schweppes, wow, you know, they have a lot. And they also bought Innocent. So new to this is Innocent Smoothies. Sorry, not new to this, it's written there, it isn't in the picture. And they've also, you may recall, a couple of years ago bought Costa Coffee. Now, Costa Coffee isn't a soft drink, I'm just reiterating the point of dominance. So Coca-Cola is very dominant in the market because it has so many different brands and in so many different markets, if you look at the hot drinks beverage market as well. So they also got Schweppes, and Schweppes brought out a premium mixer, so their signature collection. So therefore you've got, that's kind of in direct competition really, isn't it, to Fentimans. If the Fentimans mixers are seen as artisan and premium, then just your regular kind of Schweppes tonic isn't going quite into that space. But the new signature collection is very firmly going into that space. So market size and market share are linked. You might be growing market share in a declining market. I see you puzzled there. So I'm going to give you an example. Prior to coming into higher education and working in the university, I was on the board of AQA for about 5 years. And AQA is an awarding body. You may well be doing AQA specifications for business studies at A level. and I wish you luck with your exam when it is coming. But AQA are very firmly in the awarding body market, and they have a good market share, so that's great. But the size of the market has been declining. Has it? People still take lots and lots of exams, yeah, but if you think about it, it's kind of 16 to 18-year-olds that take exams. So the number of 16 to 18-year-olds has been declining. And here is some amazing statistics from the Office of National Statistics which show this. Now, I've done it from sort of 2015 because that's the time that that I was at AQA and that we were really concerned about it. So as you can see here, this line here is kind of what it looked like in 2005. And this line here follows actual numbers of 15, 16, 17, 18, 19 and 20-year-olds. So as you can see, it was contracting. So it contracted 15 to 16, but if you think you can't have more people suddenly born that are 15, 16, 17, 18, 19. So what happens is this little dent here follows you. It follows up. So at the moment, universities are suffering from a lack of 18, 19, 20, 20-year-olds. So that little dip there, it's known as the demographic dip. So if you Google anything to do with the qualifications market or the higher education sector, you'll see talk about demographic dip. There's been a dip in how many people of that age there are in your market. Okay, just a little bit of trivia for you. So look, just circled there, boys and girls, or males and females, demographic dip. And that dip caused a market challenge to AQA when it was 16-year-olds, 17-year-olds, 18-year-olds. And that dip has moved up as time has gone on. And here in 2020, we're actually starting to come out the tail end of it. But that dip affected the education sector market quite significantly. So, an activity to round off this session, and you can pause the video and go away and do it. I'm not going to be saying much else after this. Use the internet to research the soft drinks, carbonates, premium mixers and flavoured carbonates market. See who are the dominant brands. So have a little look around that. We saw Schweppes with their signature range. I've given away another one there, Fever Tree. Fever Tree has now overtaken Schweppes to become the highest selling mixer brand in Britain's supermarkets. So not just premium, Fever Tree have overtaken. So boosting its market share to 39% versus Schweppes' 31%. So it's all real fascinating stuff, kind of what the levers are, who the players are in the various markets. So use the internet, do a bit of desk-based research. We're going to touch on what desk-based research is in a subsequent video, and just have a real nosy around that market. Go and have a look at the Fentimans Market Report, and just spend a bit of time in Google and just have a look at that sector, or all of those markets, and just get a feel for it. Okay, it's just interesting. So that concludes markets, and I will see you in part 2 where we're going to be looking at customers.